The market was split this time on what the Bank of Canada would do, but today the bank held its policy rate at 2.75%, and this leaves the prime rate at 4.95%, and new mortgages are available in the low 4% range. But here's the real story. Despite no rate cut today, the bank's message was decidedly dovish, and that has big implications for your mortgage and for Canada's economic outlook. The bank made it clear we are in a highly uncertain environment, and it's driven largely by the sudden and unpredictable shifts in the U.S. trade policy. In fact, instead of offering a traditional forecast back in January, the bank released two separate scenarios in its monetary policy report. One scenario where the trade tensions cool off, and the other was where we have a full-blown trade war and recession. And right now, we're actually somewhere in between those two scenarios. So let's look at what's driving the bank's caution. One, inflation dropped to 2.3% in March, and that's good news, but businesses and consumers alike expect prices to rise again due to tariffs, and that's keeping short-term inflation expectations high. Not to mention, this is higher than what inflation was at 1.8% back in January. The next thing is that the job market is weakening. Canada lost 33,000 jobs in March, and those were mostly full-time jobs, and we're seeing that wage growth is cooling. Household spending, it's slowing down. Businesses' investment, it's subdued. All of these signs point to a cooling economy, and a lot of them are a direct result of the rhetoric coming from the leader of the country to our south. So where are we going to go from here? Well, scenario one is the soft landing version, and that's where tariffs eventually will ease. GDP growth, it will slow temporarily, but then rebound, and inflation will stay somewhere around 2%. In this case, we could see more gradual rate cuts and a more stable housing market, a more stable employment market. Scenario two, it's much more severe, and that's like a full-blown global trade war. Hopefully, that's not the case. It would almost for sure mean a Canadian recession here in 2025, probably an American recession that, of course, has a spillover as well. And we would likely see inflation here in Canada spike over that 3% mark due to persistent cost pressures. Really, that's why the bank's not committing to a path yet. So instead, the bank is going to proceed carefully, watching how much the tariffs hurt jobs, investment, and consumer confidence here in Canada. So really, at the end of the day, what does this mean for you? Even though today's rate stayed flat, economists, I read Capital Economics, but others, including BMO and other banks, they expect that the bank is going to continue to cut rates further. The question is how far? Maybe as much as down to 2%, which would be 3 more 0.25% cuts this year. I'm kind of leaning in the camp of 2 more rate cuts this year, probably June 4th and again in September. So what does this mean to you? Well, if you're in a variable rate mortgage, better days could be coming soon. We are expecting those rate drops, right? If you're renewing, we could see some more competitive rates by the summer. So if your renewal's coming up soon, please reach out. Let's talk about a couple of strategies. Make sure you're getting a good renewal offer, and we can change things up if you're not. And lastly, of course, if you are buying or planning to buy right away, this rate environment might improve your affordability. However, you might also want to make sure that you act before housing demand heats back up again. With a little bit of savings on interest rate isn't necessarily better than paying thousands of dollars more for a home. So what's the big picture? Well, with trade uncertainty being the wild card, and with the Bank of Canada not being able to fix that, it is keeping laser focused on keeping inflation stable and supporting growth in our economy. And that is good news for mortgage borrowers. So if you're concerned about your mortgage renewal, your mortgage itself, or you just want to plan ahead, let's connect. The next Bank of Canada meeting is on June 4th, and rate cuts very much still on the table. So until next time, reach out if you have any questions. Otherwise, stay informed, stay ready, and we'll talk soon.